Hi there, Stephen Gardner. I'm the best-selling author of A Bridge Over Troubled Wall Street, and I want to share with you an article that I recently wrote called Should You Be Splitting Your Money Between the Three Investment Worlds? And those worlds are the banking world, the insurance world, and the Wall Street world. And I'm going to throw in an extra world here at the end. Okay, but let me go through each of these, and then at the end of the day, you've got to decide. You've got to decide your level of risk, the amount of money that you bring to the table, your goals, your age, all of that's dependent on you. If I can help, please reach out to me. I'm happy to do that. Or if you want to glean some incredible information from my best-selling book, A Bridge Over Troubled Wall Street, please pick that up or reach out to me. I'll send you a copy of it. There's some really incredible information. But let's talk about the banking world. This is something that has been around for over 100 years. Borrowing money is probably one of the oldest professions in the world, and those that are on the positive side of interest do really well, and those that are on the negative side, well, they end up carrying a bunch of bad debt, right? So with the banking world, you have things like FDIC, you have money market accounts, CDs, savings accounts. Unfortunately, after the Great Recession, banks have really been forced by the Federal Reserve to keep interest rates incredibly low. In most cases, they don't even keep up with inflation. And so how do you properly use banks today? Most people have money sitting in savings accounts earning less than 0.5%. Others are in very low yield CDs, but they sleep well at night knowing that they have that FDIC protection. I think it's a little bit overrated if you do any kind of research on the FDIC and how much reserves they actually have, but that's for a completely different video. So you have to decide that the main advantage to banks today is the liquidity factor. You can go in 5-6 days a week and pull out most of your money. That's the positive. The negative is banks can't really do much for you because you can walk in any day of the week and pull your money out. So there's not enough time for them to really go out and earn something for you. That doesn't mean that they're not earning for themselves. If they're paying you 0.5% and charging you 4, 5, 6, 7%, you can see the marginal spread there is very, very large. The percentage they're making is incredible. Then you get into credit cards and different things like that. The banks are doing very well. It's time for them to start raising rates, but again, time for a different video. So that's the banking world. The next world is the insurance world. You have things like cash value life insurance, which I'm a big fan of if it's built properly and utilized properly. There are things such as annuities. You can ladder annuities. There's guaranteed income annuities. There's guaranteed interest rate annuities. So the advantage of this is a lot of these insurance companies, long track record, been in business over 100 years, weathered the Great Recession, the Great Depression, both world wars, but the interest rates are kind of low. So again, it comes down to how much time am I willing to tie my money up for, and how much interest are they going to give me, right? Be very careful with annuities. I'm not a big fan of those. After doing a lot of research on annuities, I've found that usually you don't get the full story and you don't figure it out until you're already into the program. So be careful. There are some good annuities out there, but I don't personally like annuities, and so I stay away from those. Okay, then there's the world of Wall Street. Wall Street has all kinds of ways to grow your money. Mutual funds, futures, stocks, bonds. There's all kinds of programs out there where you can grow your money. And, for the most part, I think the stock market will have its ups and its downs. That's just history. The only time you should really completely bail on the stock market is when you lose faith in the American economy. If you don't believe the economy is going to continue to move forward and grow, then you don't want to be in the stock market because it's all dependent upon the economy doing well. So just something to keep in mind. Where you have to be really careful is there is no net below you. So if things fall, you can lose money. A lot of the fees are very misleading and end up eating into a significant portion of your money over a 10, 20, 30-year period of time. You can check out some of my other videos to learn about how fees end up really damaging your money down the road. But there are good things about Wall Street. You can get in with a small amount of money, so the barrier to entry is really low, and there is liquidity within a couple of days, similar to a bank. But at the end of the day, a lot of it is driven by what is the economy doing and how innovative is the company that you've decided to place your money in. You have to be very careful because Kodak used to be an incredible stock, and then they filed for bankruptcy and went out of business. Thousands of stores closed. At the same time, Instagram opened and had billions of dollars pour in. So things can just change very, very quickly. You have to be on your toes that way. Okay, so the fourth world is a world that's not really talked about. In fact, sometimes it's even demonized, but that's alternative investments. So anything outside of these three worlds is now considered an alternative investment. For heaven's sakes, real estate is now considered an alternative investment. But there's bridge loans, there's private contracts, there's car lending. There's all kinds of stuff. I'd be happy to share the different programs that I've researched and feel comfortable with, and even the ones that I've put my own hard-earned money into. But these are the four worlds. You can decide what percentage to have in, which ones to avoid completely, which ones to use for maybe a short period of time, but not a long period of time. I hope you found this video helpful. If I can help in any way, please check out my other videos and articles and my best-selling book, A Bridge Over Troubled Wall Street, or reach out to me personally at Stephen with a PH at yourbridgeplan.com. Otherwise, thanks for checking out today's video.